Did you know that investing can be broken down into different asset classes? And do you know what the main asset classes are? In this video, I will go over the 6 main asset classes that you can invest in. What are their differences? What are their advantages and their disadvantages? Not only that, if you stay until the end of the video, I will also share with you what are the asset classes I invest in and how, so stay tuned. Also, this video is part of a series dedicated to people getting into investing and starting their journey toward financial freedom. Hi, my name is Vedo and I'm here to help you better understand the wealth game and become part of the wealth game nation. As the name itself says, it's just a game that the wealthy play, and the sooner you realize it's just a game, the sooner you can learn the rules of the game and take part in the game. On this channel, I cover everything related to personal finance, investing in the stock market, cryptocurrencies, real estate, and everything related to the game. So let the games begin. In the last video, I have explained the 6 main steps to cover before getting into any kind of investing. I will not recap any of them here. However, I will leave a link to the video in the description below. If you haven't seen it, I highly recommend watching it because then this video will make much more sense. Now, in this video, it's time to examine the 6 main classes that you can invest in. So let's get going. First, let's establish what is an asset class. Well, according to Investopedia, an asset class is a grouping of investments that exhibit similar characteristics and they're subject to the same laws and regulations. There are many different asset classes, and in this video, I will cover the main 6 asset classes, the differences, and what does it mean for us. Asset class number 1, stocks, also called equities. Stocks represent shares of ownership in publicly traded companies. Historically, this asset class has outperformed the other asset classes. The average annual return of a stock market is around 10%. Stocks are also volatile in the short term, and this needs to be considered when investing in this asset class. In my opinion, this is the most popular asset class, as you can start investing in the stock market with very little capital. Asset class number 2, fixed income or bonds. This asset class is more stable than stocks as they have a set rate of return. This is when you borrow your money for a longer period of time, usually years, and you get a set rate of return. This asset class is considered safe compared to the other asset classes, and according to my research, the average annual return rate is around 5.3%. Asset class number 3, cash equivalents. This asset class is similar to the fixed income or bonds, since here you also borrow your money, but for shorter periods of time, usually up to 90 days. Naturally, since the duration of the time in which you borrow your money is shorter, the rate of return for cash equivalents is smaller than the fixed income or bonds. Asset class number 4, real estate. This is the biggest asset class in the world by market cap. It is also the oldest one, and most of the time you need to have a bigger capital in order to get into real estate. Real estate helps protect future purchasing power as property values usually rise over time, and you also make money from rental income. According to my research, the average annual return for real estate is 4.3%. Asset class number 5, commodities. This is an asset class that invests in physical goods such as gold, platinum, crude oils, natural gas, corn, etc. Similar to real estate, commodities also help protect future purchasing power as the values of commodities rise over time. However, since the inflation has been higher the last few years, commodities did not manage to keep up with the inflation. Also historically, commodities have had a low correlation to the other asset classes. Average return of this asset class is 2.3%. Asset class number 6, cryptocurrencies. This is the youngest asset class in this list and also the most controversial one. This asset class is designed to work as a medium of exchange to a computer network that does not rely on any central authority such as a government or bank to uphold or maintain it. As you can deduce from the statement already, a lot of controversy here. As cryptocurrencies are decentralized, they do not rely on any traditional authority like a government or bank. Despite all the controversy and our own opinions on this matter, this asset class cannot be ignored. It has had ridiculous return over the last 10 years, and holding even a couple of percent of one's portfolio in cryptocurrencies has had significantly positive impact on the overall portfolio. This still does not mean that you should go out and put your whole lunch money into the next Bitcoin that will 1000x this year. To summarize the topic on asset classes, there is no right nor wrong asset class to invest in. They all serve their own purpose and they all have their own pros and cons. Historically, there has been little correlation between asset classes and in some cases also negative correlation. An example for a negative correlation would be stocks and bonds. When we are in a bull market, stocks perform better than bonds, and when we are in a bear market, bonds perform better. For those who are not familiar with those terms, bull market is when the prices rise for a certain period of time, and bear market is when the prices fall also for a certain period of time. I also tried to find a consolidated overview of the main asset classes and their correlation to the market cap and their annual percentage yield, but I was not able to find any good overviews that puts it all together nicely. Therefore, I have created my own overview that I wanted to share with you. The data presented in these 2 overviews is my own interpretation of the data I found at the time of this recording. Since it was not straightforward to consolidate this data, a slight miss on my part is of course possible, but looking at the overall big picture, this is the big picture. I will list all the sources I used in the description below. As you can see in the market cap overview, the biggest asset class is real estate and the smallest one is cryptocurrency. This hopefully makes perfect sense to you, as real estate is the oldest asset class in the world and the cryptocurrencies is the newest one. Next, you can see the annual return yield overview. Here you can see that historically, commodities and bonds do not have a great return. Even though real estate also does not have great returns, they are still better than commodities and bonds. Real estate usually appreciates a little bit more over time, and this makes it also quite lucrative in my opinion. Now, please brace yourselves and do not get fooled by the cryptocurrency's return, as this return illustrated here is on Bitcoin over the last 10 years, and those returns are highly unlikely to repeat ever again. Even when we look over the last 4 years, the return of Bitcoin has fallen drastically down to 80% average annual return. Again, this is still an amazing return, but I would not count on anything even remotely close going forward. If you like anything you hear in this video, you'll be doing me a big favor by just gently clicking the like button, subscribing to the channel and sharing this video. In return, I will do my best to help you become more financially literate much faster than I did. By sharing my insights, my journey, and teaching you the rules of the game that the wealthy play, you will be able to take part in the game in no time. As promised in the beginning of the video, I will share with you now how my money is invested right now. 68% of my money is in real estate. Those are residential apartments that I have bought or built over the last 8 years and they are currently rented. 23% of my money is in stocks. I have 2 stock portfolios. The larger one is a long-term investment portfolio which includes ETFs and stocks. I don't own any hedge funds, as I'm not a believer in those. The smaller portfolio is a mid-term investment portfolio, which is dedicated to swing trading. 5% of my money is in cryptocurrencies. Here I follow a 60-40 split where I invest 60% of my money in Bitcoin and Ethereum, and the other 40% I invest in many different altcoins, but nothing crazy like meme coins or small market cap coins. Most of my altcoins are in the top 20 by market cap, with only a few in the top 50. Last 4% of my money is in good old cash. I realize this is not a lot, but it is the current situation. The next phase of my plan is to sell one of my rented apartments and invest that money into the stock market and keep a bigger chunk of that money in cash, which I plan to deploy in future corrections or bear markets. For those who are not familiar with those terms, as the great investor Peter Lynch, who I believe could also be a stand-up comedian, says, correction is a fancy way of saying we just lost a lot of money. This is when the stock market drops over 10% from its all-time highs. Bear market is when the stock market drops more than 20% from its all-time highs. The breakdown of my ultimate portfolio would be something like 50% in real estate, 30% in stocks and ETFs, 8% in cryptocurrencies, as I like to live dangerously, and about 12% in cash. As for the other asset classes I have listed above, my opinion on those is commodities. This is not interesting to me at this time in my life, as they do not have great returns. In my opinion, this is for people who do not understand investing and they just want something safe to fight inflation with something which this asset class is currently not able to do. Historically, commodities, especially gold, and inflation have been canceling each other out, but lately inflation is higher than the return on investment on commodities. I believe there are far better ways to put my money to work. So for me, this is a pass right now. Fixed income, bonds, and cash equivalent is also something that I'm not interested in. Mainly, I don't want to benefit from fixed interest rates, which does not fit my personal beliefs. Just because somebody else needs money doesn't mean that I should profit from that. This is a win-win situation for me, and I do not want that. I rather invest my money into something where both parties can benefit from. On top of that, same as commodities, I believe there are far better ways to put my money to work and make greater profits with a slightly higher risk, which at this time in my life I'm willing to take. This one is a hard pass for me. So that was my current allocation and my view on the 6 main asset classes. Now, you tell me, what asset classes do you currently invest in or are planning to invest in? How does the allocation of your portfolio looks like? Don't be a stranger, and leave a comment below, as I'm really curious to read about it. That's it for now. Thank you so much for watching. I hope you enjoyed it, and I will see you at the next games. Psst, come here. Do you know how to make a small fortune in the stock market? Get this. You take a big fortune and you follow the advice of YouTube gurus promoting buy the dip strategy while they identify the dip for you. And that's how you do it.